It's Friday Coffee with your mortgage man Eric. Here we go. So today we're going to talk about the effects and the consequences onto the mortgage industry. Once again, kind of your weekly update from the COVID-19 and coronavirus issues, unfortunately, right? So a lot of news came out again this week. Some of the volatility. If you've been following my weekly updates regarding what has happened, we go back 3-4 weeks ago when we were on the brink of collapse. We're certainly better since that moment, but trust me, things are still extremely volatile. We're certainly not out of the woods yet, and I'm going to dig into it. So some of the lenders and banks this week have announced some tremendous overlays. If you've been paying any attention, Chase was a big one. Chase announced 80% loan to value, so you need to have 20% down payment or equity into the loans. And I'm not sure if that's just for refis or if that was for purchases and refis. I know it was for refis at the very least, that you need 20% equity into the transaction with a minimum of a 700 credit score, right? I mean, holy moly, what are we doing? Going back to the 1950s. Now, check it out. They're not the only lender or bank out there that has done that in this environment. There are some of our more local direct mortgage lenders, and I'm not going to name shame anybody here right now, that have taken a stance on refinances also need to be 700 FICO scores, and they can't lock your loan until they get it clear to close. I mean, some really tight, you may think they're absurd, and they kind of are, overlays, but I'm telling you, that is the volatility that is happening in this market right now. Why? Well, if you paid any attention, if you tuned in on the last episodes, it all really comes down to the stimulus package and that forbearance thing that's going on. Holy moly. I mean, I'm telling you, if you paid any attention to the forbearance, you can miss 3, 4, 6 payments, right? And you don't miss them, they just get kicked down the road. So kind of a recap, reiteration real quick, you can miss your payments. They actually just get pushed down the road. So you miss 6 payments on month 6 or month 7, 7 payments are going to be due, right? So you're not missing them. They're not putting them to the back end of the loan. That would be called a deferment. It's not deferment. Forbearance is different than deferment. Understand that. Forbearance is you're kicking the proverbial can down the road for a couple of months, and in a couple of months, all of those months of payments will be due. So they are looking at this, and that is what's created the volatility. And now Ginnie Mae has stepped up to the plate. They have stepped up to the plate. They're willing to deal with this. Fannie Mae, Freddie Mac, or FHFA, Mark Calabria is not playing nice in the sandbox right now. He's in a pissing match pretty much with the feds at this point because of the whole bailout, that happened back in 2008, and Fannie and Freddie not coming out of conservatorship for years and years and paying back all those TARP loans that they made, right? And every profit has been swept by the Treasury. So it's a longer discussion. But basically, Fannie and Freddie is saying they do not want to securitize any of the loans. What does that mean is that any of the loans that have gone on into forbearance, Fannie and Freddie does not want to securitize them. They don't want to be responsible for them. They want to make the lenders, the investors, the servicers responsible for them. Less buybacks, can't get them off the line, so that creates a lack of liquidity. Monies to lend to consumers in the market. So that has taken place, and it has yet to be resolved. We did hear that today, Friday, there's supposed to be more talks. Fannie, Freddie, Calabria with the FHFA are supposed to be loosening their stance on that, if you will. I mean, I think that they're understanding that these investors, with the uncertainty with these forbearance loans, they can't keep all these forbearance loans on their books, right? They have to get them securitized by Fannie and Freddie. They need that backing. They need that security. They need that insurance. That is what is missing to the piece of the puzzle right now. As a result of that, Banks, lenders are putting these overlays on there, and the ones that are really getting squeezed out the most is FHA, VA, kind of a reiteration, if you will, from last week. So what we're seeing is really most of the industry is a 640 and under is gone on an FHA deal. Yes, there are still some that are around, but let me tell you, if you were to price out a scenario with a 590 or a 610 credit score, what that interest rate is and the points it would cost to get it down is absolutely absurd. So keep that in mind. It's just because a lender still can go down to 580, is that really what the consumer is going to end up doing? No. I mean, the rate is extremely high, and the amount of points, extra closing costs, it's going to take to get it down there. So even in the 640 to the 659 bucket, what we're seeing is just it's disgusting on what the rates are and the points it takes to get that rate. You're not really seeing any relief until you get to the 660 and above on FHA and VAs. Now, and what we're seeing already, now check this out, what we're seeing already out of the gate is the amount of people going into forbearance, that the FHA and VA loans going into forbearance are already twice as high as conventional loans. Boom. So, I mean, there you go. There you have it. Why is this happening? Why are rates being raised on FHA and VA loans and the overlays and the minimum FICO score requirements going up? There you have it. Because statistically speaking, FHA and VA loans, especially below a credit score standard, have a much higher default rate than other loans. It is what it is. Statistics are statistics. And here we are already kind of proving that point, which only backs the reason why these servicers and aggregators have put these, and banks have put these overlays on the products. It makes sense when you dive deep into the weeds with me on these topics, right? So we can only hope at this point that Calabria, director of FHFA, Fannie Mae, Freddie Mac, comes around and is willing to play ball with these investors and securitize these loans that are going to be in forbearance, because it's going to happen. And look, there's so much uncertainty because we don't know when the economy is going to open back up. If it will, and certain states will, certain won't. And look, the longer it takes to open back up, the more consumers are going to go into forbearance. The longer they're going to be in the forbearance. So the more loans are going to be in forbearance. So the more that Fannie and Freddie will need to bail out the investors, if you will. Which using that terminology really isn't correct, because the investors didn't create this. The servicers did not create this. It was the federal government that created this via the stimulus package. The stimulus package held the proverbial gun to their heads and saying consumers can take this forbearance. So keep that in mind when you're talking about bailouts. So they really need Fannie and Freddie to come to the rescue to hopefully get this thing back on track. Will that get the whole thing back on track? Probably not. The wheels may not be back and greased again for maybe another year, because we don't know what's going to happen with foreclosures now, right? Think about this. Down the road, the forbearance took place, and you didn't realize that you're responsible for 7 months of payments now all together, one lump sum, and you can't make it. And now your home is going to go into foreclosure. Look, you're going to hear more than one story about that. So we already know that people are going to lose their homes as a result of this. Unfortunately, it is what it is. And that is, I'm telling you, that's a terrible thing for people to go through. Horrifying. Like I said this before, this could be '08 on steroids. And the only reason that people, I think, aren't seeing that right now is because of the humanitarian effect that's happening with people dying, right? If we remove that and we just looked at what's going to happen with people's homes, it's '08 on steroids all over again. But it's on steroids, right? Keep that in mind. So how many foreclosures are we going to have? How many millions of foreclosures are we going to have across the country? It's coming. We know it's coming. We just don't know the capacity. That is affecting the volatility. But the most important thing that we need right now is for Fannie Freddie to step up to the plate and provide some securitization support to the investors and the servicers that are out there. With that said, it's Friday Coffee, the Mortgage Man Eric. We'll see ya. 602-757-2171. See ya.